Namaste, Sat Sri Akal. मैं हूं CA Sankalp Kanstiya and I welcome each one of you in this amazing session of strategic financial management. Are you ready to learn something new as usual? Let's get started, guys. So, 2 lectures over, things on track, the wavelength is matching, uh, pretty much done in terms of understanding of few global financial terms, inflation, interest rate, liquidity, how the bond, dollar prices move, gold prices move, all of that in our head, right? The Japanese economy, how it went through a stagnation phase, the Zimbabwe economy, how it went through a hyperinflation phase. Yesterday, we understood probably the last lecture, we understood the advent of mutual funds in the whole world. 1774 is when it all started. 1924 is when it was revived. And till now, huge sums of money is already been invested in mutual funds as well. And that is where this chapter becomes so very important, because India has a enormous potential to grow the whole mutual fund industry. And if that industry grows, trust me, we as chartered accountants will always be in demand, because a lot of stuffs that these mutual fund companies do are connected to all of us, right? So the first 2 lectures, I understand that there was a lot of theory, there was a lot of concept building that was going on. So it was heavy, but you cooperated and understood in the right perspective. So today, I thought we'll keep it a little light. We'll do a lot of sums, right? And major focus will be on the sum solving aspect, right, guys? So on that note, first, as decided earlier also, we will quickly revise what we did in the last lecture, and then we will take it over from here. All right, guys? So what did we do in the last lecture? We started with understanding of the mutual fund. So can you please tell me what exactly is a mutual fund? Can you tell me what exactly is a mutual fund? So basically, your mutual fund is a system or a scheme wherein collective like-minded people, so wherein pooling of money is done by the like-minded people. So pooling of money is done by like-minded people, right? Having an objective, having a similar objectives, right? So having similar objectives, wherein asset managed, yes, unity is strength was the keyword, right? Unity is strength. Right, guys? So having similar objectives, wherein we appoint, or rather the mutual fund trust appoints a professional portfolio manager. A professional portfolio manager is appointed who manages funds for us and generates return in response to a fee that is given to him. So we appoint a professional portfolio manager. What does the portfolio manager do? He invests our funds, and in return, what do we get? Returns from the fund. And what does he get? A certain amount of fee is paid to him. So that is what our understanding of mutual fund is. Correct? So pool funds to invest in market in order to overcome limitations of time and expertise. So yes, those were the two catchwords that unfortunately we don't have. We do not have time. We do not have that level of professional knowledge to understand the market thoroughly. So both of that were missing, and that is what led to the whole concept of mutual fund. Now, broadly, two type of mutual funds exist. One is called as a close-ended mutual fund and other is called as a open-ended mutual fund. Can you please tell me, guys, what is a close-ended and what is a open-ended mutual fund? Tell me, everybody, what is a close-ended and what is a open-ended mutual fund? Yes, yes, everyone, please give it a try. You remember it? Right. So close-ended mutual fund is what Van Ketich started, wherein he issued limited number of units. Correct? No free trading. Okay, you can use that word. Limited entry and exit. Yes, you can use that word. Only investment can be done during the new fund offer. After that, if you want, then in that case, you will have to buy it from the market, from the stock market itself. That is what close-ended is characterized by. So if I have to write here, so I'll say first thing is limited number of units. Limited number of units. And when is it issued? Issued at the time of NFO, new fund offer. If in future if in future we need any more units, then in that case we have to purchase it from the stock market. So if an investor wants to buy or sell, I think, right, it is buy or sell further units. If the investor wants to buy or sell further units, then what he has to do? Then he has to go to the stock exchange, because now the fund house is saying, please do not come to us. Then he can do it through stock exchange. Now, because he has to do it through stock exchange, what will happen is, yes, basically secondary market, you'll have to go. What will happen is the pricing will be based on demand and supply and not net asset value. So the pricing in case of close-ended fund will be based on, stock market price. So it will be based on stock market price, and stock market price is based on what? It is based on demand and supply. So can I say these are the main points of consideration that we have? And on the other side, we have open-ended funds, wherein unlimited number of units are issued. Unlimited number of units can be issued. How is that possible? Because if any new units are to be issued, or if any units is to be redeemed, then in that case you have to directly visit the mutual fund house. So if an investor wants to buy or sell, this can be done directly through the mutual fund AMC, through the mutual fund asset management company. Right? Here the pricing is based on NAV. Pricing is always equal to the net asset value as on that date. So whatever net asset value is prevailing will be the price at which units will be bought and sold. Guys, can I say this primarily distinguishes or defines what exactly your close-ended and your open-ended fund means. Right, guys? Any other point which you would want to add? Or this almost says it all? Done? Great. So this was about it. And the last thing, liquidity. Liquidity here in case of close-ended fund is restricted. High restricted because in close-ended fund, if there is a buyer or a seller available in the market, for our particular mutual fund unit, only then we'll be able to continue with the purchase and sale. But as regards open-ended is concerned, it is highly liquid. Whenever you need money, go to the fund house and they will give you all that you want. I know what is AMC, because I'm not taught you all AMC, but I've used the word. I'll still be telling you all, but AMC full form is Asset Management Company. You would have heard the word Kotak AMC, HDFC AMC, ICICI AMC. So don't worry, we have to do it in theory. Asset Management Company. Alright guys? Sure. So this kind of sums up what we did yesterday in terms of understanding what is closed-ended, open-ended fund. Okay. Then we went on to understand the concept of NAV. Tell me what is NAV. The full form is net asset value. I know that. Tell me what exactly it is. What exactly it is. So can I say NAV basically means, net asset value basically means market value of investments. Any investment that we have done, we have to take the market value as of date. Plus, we may receive, the mutual fund AMC may receive some dividend. So that is also added. Anything that is received will be added here. Any other interest income is there, that will be added. Any other income or receivables. Any other income slash receivables. Alright guys. So all of this will become your net asset value. Less, what are we going to deduct? Correct. We will be deducting accrued expenses. Payables, if any. So all of that is deducted. Okay guys. This all basically will be your net asset value, but we needed per unit. This is total net asset value. We need it per unit. So what do we divide it by? So accrued expenses, payables, outstanding expenses, everything. Okay. Now this becomes your total net asset value. We divide it by outstanding number of units. Outstanding number of units. So can I say, if even 6 months down the line, even you without doing any even without you doing any kind of revision, still if somebody wakes you up from the sleep 6 months after now and somebody asks you what is an open-ended fund, what is a closed-ended fund, what is a net asset value, will you be able to tell them? Are you in a position to tell them? Yes, everybody? Perfect. This is what we want. And always remember, whenever we are calculating NAV, it will be based on 4 decimals. And when we are calculating number of units, it will be 2 decimals. It will be 2 decimals. Okay, guys? Done? Are we clear with the whole recap? Yes? Sure. All clear? See again, all clear whenever you say, I am assuming that even 6 months down the line, somebody wakes you up from the sleep and asks you, hey, Macha, I want to understand what is closed-ended fund. And you should be in a position to explain them with perfect clarity. Done? Sure. That's where we say, yes, sir. We are clear. Sure. Okay. So now on that note, let's start with some question and answers as promised today. But first we are going to solve today a very, very simple sum. A very, very simple sum is what we are going to solve today. Okay. So let's start with that. And that is question number 3. Easiest sum. I'll just read. Calculate the Cinderella mutual fund as the following assets in scheme Rudolph. Nairobi Limited number of shares market price, Dakar Limited market price, Single Limited market price, Cairo Limited market price. The total number of scheme of Rudolph are total number of units are outstanding are 10 lakhs and the accrued expenses are 2,50,000. Other liabilities 2 lakh. You have to calculate the NAV per unit of scheme Rudolph. Alright guys. So can I give you all 2 minutes and I can expect you all to solve it? Or do you want me to solve even this level question? Sure. Thank you so much. Yes, sir, we will solve it. I give you all 2 minutes. Your time starts now. Please solve it properly. Let the game begin. Come on. Okay, guys. So easy peasy question, done and dusted. This question was just to give a boost to your confidence. So don't get overexcited by solving this question. Yes, the next questions that we are going to solve are going to be very important and they will definitely define how well we've understood the whole concept. Now, before I start with my next question, before we start with the next question, I have some discussions to be made with each one of you. Shall I start, guys? Shall I start? Okay, sure. So, guys, please check. Some are saying audio is not visible, some are saying video is not visible, some are saying both are visible. Please confirm. I think both are there because majority of people are saying that yes, both are there. If there is a buffering issue, then it is not from my end. Then your internet is slow. If you're not able to listen anything, then it is not my end. It is your issue. Everything fine. Okay, cool. Sure. So, because my internet is running fast like a Ferrari. Chalo, cool. So now here we are with our own example and let's start. No issues as of now. Cool. So always remember one thing. Whenever you are solving a question, a mutual fund question, you have to think from either of the two angles. Whenever any mutual fund sum is given, you have to think from either of the two angles. Either you will have to become the CIO of the mutual fund. Do you know what is a CIO? Do you know what is the CIO? CIO is the Chief Investment Officer. Chief Investment Officer. And the other is as a investor. All sums, 40, 50, any number of sums you do, there is only going to be two scenario. Either you will have to step into the shoes of a CIO. What is a CIO? The mutual fund head is basically called as a CIO. The mutual fund head, like the companies have CEO, mutual fund heads are called as CIOs. So Chief Investment Officer. An investor is obviously the person who is investing in the units, right? Cool. So these are the two people through whom you have to think. Now, of one company, my own, then do you know there is my own mutual fund company? In fact, I have a suggestion. Let us start our own mutual fund company, no? What say? We will pool the money and we'll charge 2 to 3% asset management cost. We'll try to pool good amount of money and then become rich. What say? As if any which case, see, now we are gaining so much of knowledge. Any which case, we are also now going to interested in investment and all of these stuffs. Let's take people's money and start investing and start earning, yeah. And let people also earn. Think about it. I'm very serious for it. Let's see now how serious you are. Chalo. So now there is one mutual fund which I already own, and that basically called as SK Mutual Fund. That basically is called as SK Mutual Fund. Now, SK Mutual Fund resolution for New Year. Awesome, Sai Puja. Let's do it here. So, the SK Mutual Fund has a Chief Investment Officer. It is the duty of the Chief Investment Officer. It is the duty of the Chief Investment Officer to calculate NAV on a daily basis and report it to the SEBI. Do you know that NAV is calculated every day? Did we discuss that in the last lecture? NAV has to be reported on a daily basis to SEBI. Every day 3:30 p.m. you have to calculate the NAV and report it to the SEBI. Yes? Okay. So it is the duty of the Chief Investment Officer to calculate NAV daily and report it to the SEBI. Okay. Sure. Done? So now what happened is this. On 4th August, say let's assume that today is 4th August. On 4th August, my company CIO reported the NAV at the rate rupees 15 per unit when day end of 4th August. Okay, no problem. Very good. And on 5th of August, I got a call from the CIO that he is not going to come today. OMG. As such, my CIO is very regular in his work. But on 5th of December, he said, sir, I'm not feeling well and generally I'm not able to come to work. But can I call SEBI and tell this? That SEBI, today my CIO has not come, so I will not report the NAV today. Will SEBI accept this or not? Definitely it is not going to accept it. It is like, okay, your CIO is not coming, let him to stay at home forever, and you also close down your SK mutual fund. You are not fit to run a mutual fund company. I'm like, no, the SEBI should not say this. So now what is happening is 5th August, my CIO has not come. But I will have to report the NAV as usual. On a daily basis, I have to report the NAV. So I give a call to my chartered accountant friends. Yes, that's you. The person in front of me on the screen is the person I will call. I will call you, who are my CA fellow friends. And I will ask them, yeah, can you please help me in calculating the NAV? my CIO has not come, and I have heard that you have learned SFM mutual funds from Sankalp Sir. So will you please calculate the NAV for me? So you're like, oh yes, why not? Oh, you will be able to calculate like that. You just send me all the details. You just send me all the details, and we'll calculate and give it to you, and then you can report it to the SEBI. And you're like, oh wow, so that is really good. So now you get a call from SK Mutual. Okay, Baba, I'll give you money for this calculation. Oh, send me your Paytm number. Hey, accountant, please transfer 11 rupees to this person's account, man. Paytm, please do that. He'll calculate the NAV and send it to me. So I will now call you, and you have told that okay, no problem. On 5th of August, 3:30 p.m. On 5th of August, 3:30 p.m. we will calculate the NAV to you so that you can report it to the SEBI. But for calculating the NAV, do you need some details? Do you need some details? Okay. So I am now giving you certain details. Use those things for calculating the NAV. Will you do that for me? Sure. Let's start now. So here I begin. So I tell you that, see, today is 5th of August, but the first thing that you ask me is, acha, today's NAV I will report. 5th August, 3:30 p.m. we will report the NAV. Don't worry for that. But yesterday's NAV, have you reported? I told, yes, we have reported yesterday's NAV. So yesterday's NAV was 15 per unit, and yesterday's outstanding units were 20 lakh units. Yesterday's outstanding units were 20 lakh units. When we reported to the SEBI, the units were 20 lakh units. You're like, okay, no problem. That's fine. Yes. Then other things I started discussing with you so that you could calculate the NAV. Then I told you that today on 5th of August, there was Mr. A who came to me, and Mr. A purchased 2 lakh units. Mr. A purchased 2 lakh units from SK Mutual Fund. So 2 lakh units were purchased. Okay. Then I also tell you that then Mr. Z had also come. Mr. A had come at 11 a.m. and Mr. Z had also come at around 11:45 a.m. and Mr. A redeemed, or what you call as sold 80,000 units. He sold 80,000 units. Like, okay, no problems. Any other thing? Then you tell that yes, see, whatever investment that we had done, see, from this whole money that we have, we had done few investment in shares, we had done some investment in gold, all of these investment we had done, and of this portfolio, there was a portfolio appreciation. Only portfolio appreciation of rupees 4 lakhs. There was a portfolio appreciation of rupees 4 lakhs. Just a moment. Yeah, there was a portfolio appreciation. In shares, there was some appreciation. In gold, there was some appreciation. There were so many shares that we hold. So little appreciation was there everywhere. And overall, the portfolio appreciation was rupees 4 lakh. You're like, okay, no problem. Any other thing that you want to discuss? Yes, sir. Sir, we also received on one of our shares, we also received a dividend. SK Mutual Fund also received some dividend to the tune of rupees 3 lakhs. We also received a dividend to the tune of rupees 3 lakh. So like, oh, very good. That's really nice. So this is all the information that I have to give you. Then you ask me on the call itself that, sir, think again, there were any expenses were there or not? I'm like, yeah. Few expenses were also done. Expenses of rupees 1,50,000 were done. So sir, tell that also, no? I just forgot, but I realized that expenses of rupees 1,50,000 were done on SK Mutual Fund for 5th of August. So this is all the information that you have. Can you please help me? I'm on call. Oh, my accountant is saying 11 rupees has been credited in your Paytm account. Now please come to your account and please calculate the NAV for me. Oh my god, it is already 3:35. So that watch is at 3:35. Sebi will call me anytime. Please quickly calculate the NAV and give it to me. Please, I'm waiting. Will you be able to do that? Let the game begin. Try it out. Try it out. Are you guys there? Are you guys there? Achha, you want more money? In 11 rupees you will not do. 15 rupees. Chalo guys, please come on. Everybody, I am waiting for your answers. Think and tell what will be the NAV based on the information here on 5th of August. It's already 3:35. Please better be quick. I may get a call from SEBI anytime now. Please. Chalo, chalo, let's see the answers. So, SD Siddharth has given the answer as 14.4103. B. Bala Makrish has given the answer 14.4104. 1 point here and there is absolutely acceptable. Padmavati is getting the same answer. Dina, Chetan, HR, others. Everybody is getting the correct answer. Alright guys, so now will you please help me to calculate this? Will you please help me to calculate? How did you do this? Please help me. Sure. So what you would have done, let me have a guess, or let's see what you would have done. So you have to calculate today's NAV. You have to calculate today's NAV. Okay. Now, how does it all start? for us, the formula for NAV is what? Market value of investments. Market value of investments. But has sir given market value of investment anywhere? The answer is no. So you may say 4 lakh, but that is not a market value of investment. That is just today's appreciation. That is just today's appreciation. No? Are you understanding, guys? So where is the market value of investment given? Can I say last days or yesterday's NAV is given? Yesterday's outstanding units is given. So can I say we will get yesterday's net market value and current dates, whatever inflow and expenses have been incurred, we will just add and less that, and we will get our whole year today's net asset value. Are we understanding, guys? Yes or no? Bolo bolo chal. Correct. So chalo, let's start with that. So we will say that for calculating NAV, ideally we write market value of investments. But here, since yesterday's NAV is given and number of units outstanding yesterday is given, we will say that yesterday's net asset value or market value for us is known to us, and that is 15 per unit multiplied by 20 lakh units, and this will be working out to how much? Bolo tell. 20 lakh into 15. It is 300 lakhs, which is rupees 3 crores. Anybody having any other answer other than 14.4104? Anybody having other than this any other answer? Let me know. Because you may be wrong. Anybody? I'm asking for the last 2 minutes. Anybody having some other answer other than this? 14.4104 is what people have given me the answer. Now, I'll try to confuse you a little. Is anybody having any other answer, or everybody feels no, this is the correct answer only? Darshan Solanki has 13.3991. Okay, very good. Or very bad, that we'll see. Okay, others? Anybody else? Then don't say, we thought this, we thought that. Chalo, so let's start now. Enough time given to you. So yesterday's NAV is there, which is 300 lakhs or what you call as 3 crores. Achha, now Dina is saying, sir, first I got the answer 15.275. Then why did you change? Looking at others. This is such a wrong policy, no, Dina? You are just following the crowd. Why do you want to do that? Now Megha Lakshmi is saying, I got the answer 15.2594. Parmi Patel is saying, I got 15.2594. So where were you guys? You were sleeping or what? Sai Puja is also now saying, I got 15.2594. So till now, why didn't you answer? Why were you waiting for me to say this to you? That others, if you've got some other answer, please tell me. This is not done, yaar. This is not done, yaar. Say no, whatever it is. Who is going to judge you for your answers? You are just at a learning phase, no? If you knew everything, you wouldn't have come here. This is not how two-way communication is that we decided on the first day. Okay, so please be fair. Whatever it is, please God. Now Terala is saying I also got 15.2594. Wow. This is too much, yeah. Chalo, no problems. I'll give the benefit of doubt since it is the first time. But next time, whatever it is, please share it, guys. Now, suppose if I would have got some other answer. Suppose now after solving, I would have got 15.2594. And then you would have said, sir, I also got the same. Then would have I believed you? Obviously not. So let that not happen. Also, one more thing. Suppose if you are a Google Drive student, you also ensure that you are pausing the video. You are also solving it before I solve it. That will be the best strategy to follow. All right, guys? Sure. So let's do it. So 300 lakhs plus. Okay. Then what information was given to us? Let's see. Then the information that was given to us was Mr. A has purchased 2 lakh units from us. What will happen to the mutual fund, SK mutual fund? What will he get? If somebody has come, you are the CIO boss for today, you are the CIO. So I am the fund manager. I am the fund manager. Somebody has come to me and he says that I want to purchase 2 lakh units. Obviously, it's an open-ended fund. That's the reason he has come to me. So I will issue him 2 lakh units. In return, I will tell him, please pay me NAV, today's NAV. Now, if he has come at 11 a.m., so today's NAV comes at 3:30 p.m. So we will have to take yesterday's NAV, which was 15. So can I say I will get cash? I will get cash. Should cash also be a part of net asset value? Obviously, anything that comes in the fund will be a part of net asset value. If it goes, it will be a part of net asset value. Are we understanding, guys? So what have I received now? So I will say units issued. You have to think from the CIO point of view, boss. You are the CIO. For the CIO fund manager, I am the fund manager. CIO means I am the fund manager. So for the fund manager, fund has come in. How much? 2 lakh units at the rate 15 per unit. So 2 lakh into 15 and 30 lakh rupees is what I have got. Can I say cash? This is nothing but cash. So I have received cash. Okay. Continue. Then redeemed. What will happen for this? Mr. F as Z came to me. I'm the fund manager. Mr. Z came to me at 11:45 and he redeemed or sold 80,000 units. What will happen to this? Can I say if units were issued, cash was received? When units are redeemed, cash is paid. So there is an outflow. So I will write here less units redeemed. And when I am redeeming, my value will decrease. Cash going out. How much? 80,000 units at the rate 15 per unit. Somebody has written here. Cash will go out, sir, of rupees 12 lakh. Somebody please confirm. Got it, everybody? Yes, sir, got it. Okay, then what happens? There is a portfolio appreciation. What will happen to this? Add or less? Obvio, we will add it. So we will add here. Add portfolio appreciation. Rupees 4 lakh. Correct? Then dividend received. Dividend received is also to be added. How much? 3 lakh. Got it? Okay. Then any other expenses? Oh, 1,50,000. What will happen to the 1,50,000? Reduce. So any expenses has to be reduced from our funds. So 1,50,000 is reduced. We will get the total NAV. We will get the total net asset value. Please do the mathematics and tell me. Come on, guys. Please do the mathematics and tell me, guys. Come on, everybody. 300 lakhs plus 30 lakhs minus 12 lakhs plus 4 lakh plus 3 lakh minus 1,50,000, and what I will get is 3,23 lakh 50,000. Yes, everybody, 3,23 lakh 50,000. Everybody, yes. Divide by outstanding number of units. Acha, how many outstanding number of units are there? Bolo, tell. Can I say that there were in all 20 lakh units? There were in all 20 lakh units, of which new units were issued. So the number of units increased. Am I right? New units were issued. So the number of units increased. Am I right? Okay, sir. How many? Sir, 2 lakh units. And few units were redeemed. So can I say 80,000 units were redeemed? So 20 lakh plus 2 lakh less 80,000, 21 lakh 20,000 units. 21 lakh 20,000 units. And this will finally give us the net asset value per unit, which is working out to how much? Let me check out. 32350000 divided by 21 lakh 20,000, and this works out to rupees 15.2594. See, this is the correct answer. And previously everybody was giving what, 14 point something and all of that. Oh gosh, I wouldn't have believed you guys, trust me. And I would have felt really bad that none of you were able to solve this on your own. I would have felt bad, not because we were not able to solve it, but my 11 rupees would have gone in vain, no? First I got this. No, Dina, now I will not believe you. Sorry. Why didn't you answer? Why did you follow the crowd? One person gave 14.494 and everybody started saying that. So, no problem. This is a learning for the next time. And I felt that how is it possible that nobody is able to get the correct answer here? So I felt something was missing. And hence I told you. Good, I discussed that. Sai Puja Nakka. What? Megha Lakshmi. Parmi Patel. Su yaar. Chalo. Darshan Solanki bhai, where were you wrong? So I think he also gave the correct answer. Chalo. Others. Chetan, where were you wrong, brother? Padmavati Machiraju is also saying, sir, I also got 14.904 when Chetan had said. Wow, wow, wow. All of you guys are now caught red-handed. Chalo. Anyways, now my question is, are you clear, guys? Are you guys now clear? Chalo. Okay. Now, first things first. First, let me please confirm with each one of you. Are we all clear? Yes. So now can I say, based on this question, based on this example, we have derived a new formula for NAV, right? So if NAV is to be calculated on daily basis, if NAV is to be calculated on daily basis, how will it be calculated? How will NAV be calculated? How will NAV be calculated? Can I say we will first take yesterday's NAV into number of units outstanding? Correct? So we will write here yesterday's NAV multiply by number of units outstanding. We'll get the market value as of yesterday. Then today, what all has happened? Today we have received the dividend. Today there will be some portfolio appreciation. So can I say, by this example, we have derived a new formula for NAV, and we will also write it somewhere in our student notes also, so that it will be helpful. Correct, guys? Okay. Then money received. Now the most important thing is money received and money paid. Dividend received, income receivable. So any which case we know. Income receivable, so we know. So what new things have been added here? This new portfolio appreciation, new money received and money paid, that will also be added and reduced, right? So add money received on issue of units. When you issue units, you receive money. Less money paid on redemption of units. You understand the word redemption? Redemption of debentures you would have studied in inter. Redemption means you can say sale kind of a thing. Right? Are we clear? So 3 new things have been added in the NAV formula, guys. Please take it very seriously. Less any other expenses which was any which case there in last working also. And this will give us total NAV. This will give us total net asset value. This is now divided by outstanding number of units. But this outstanding number of units will also have few calculations like yesterday's number of units, plus units issued. I'll show everything. Don't worry. First, let me complete the whole thing. Plus units issued less units sold, or what you can say units redeemed. You have to think from the angle of the fund manager, from the fund, SK fund manager. You have to see from that angle, and that's how you will get the answer. Are we now totally clear? I'm asking you guys, are we now totally clear? If yes, hold on for a second. I know you want to write this. I know you are super excited to write this, sir. We want to write this. I'll give you the time. But before that, let me take you to question number 2. Everybody with me. Come to question number 2. Just for a moment, come to question number 2. See here. Calculate today's NAV of Flexi Fund if the following details are given. What is Flexi Fund? Flexi Fund as such means a mutual fund wherein Flexi Fund basically means a mutual fund wherein investment is done in equity, debt, everything. We will be understanding it later on. For now, let's focus on the calculation part. See here. Yesterday's NAV 12.87 per unit is given. Total number of outstanding units yesterday was 1.25 crores. Face value 10. Expenses rupees 1 lakh. Assume sale and repurchase NAV is at 12.87. Okay. So obviously at today's NAV value, whatever we are going to purchase and sell, redeem, all of that happens here only. Expenses rupees 1 lakh. Okay. Appreciation of portfolio today 12 lakhs. Units fresh subscription 2 lakhs. Fresh subscription 2 lakhs means, can I say new people have purchased our units? Units redemption. Few people have sold their units to us. And dividend received 1 lakh. What is going in my head now? Are you able to read it? What? Will you be able to solve this sum as well? Yes, everybody, you have the formula. Yesterday's NAV per unit into total number of outstanding units yesterday. Today, how much money we have received on issue of units. Money paid will be reduced on redemption of units. Are we clear, guys? Appreciation of portfolio is added. Dividend is added. Right? All of that will be used to calculate the NAV. Divided by outstanding number of units. What is outstanding number of units? Yesterday's number of units plus units issued today less units redeemed. Okay. Will you be able to solve it? Done. Are you clear with the example? Yes. Are you clear with the formula that we have derived now? See, there are so many formulas that we are going to derive. This is a formula where we have derived it. We first solve the question. We first solve the example. Then based on that we derive. That's the approach we need to follow. And once this was done, now we are a question which is on similar lines. which is on similar lines, and we have to solve this. Now, okay guys, sure. Now I can say all. Any questions you have, guys? Can I say it all yours? Can I say it all yours? Sure. Please, you write the example first, then you solve the sum. Whatever you want to do, you do it. But start. Yes, guys. Done. Did you understand? Question 2, were you able to solve it? And I can see from the live messages that everybody has solved it and everybody has got the correct answer. Really happy for you. Acha, will this be a part of your student notes? Yes, we have understood a new formula. So definitely it should be a part of our reference notes. Chalo, write down. I'll just solve it for people who not got it. There would be some who wouldn't have understood it. Let's solve it for them. Calculate today's NAV if the following details are given. Yesterday's NAV, total number of units outstanding, expenses, appreciation, new units, redemption, dividends received. So chalo, let's write it down. So NAV is equal to, now we have a new formula, yesterday's NAV per unit multiply by number of units. Okay. How many are there? 1.25 crores into yesterday's NAV 12.87. So 1 crore 25 lakh units at the rate 12.87. So this will become 16 crore 8 lakh 75,000 plus incoming money, cash coming in. So money received. Why? Because issue units. How much money received? 2 lakh fresh subscription at the rate. Fresh subscription will be at 12.87. Yesterday's NAV, because today's NAV will be calculated at the end of the day. So 12.87 into 2 lakhs. Less money paid. Why? Because of redemption. Of units. So how much redemption has happened? It is 0.75 lakh. So basically 75,000 units. Same at the rate 12.87. So both amounts we have to write here. So 2 lakh. So this will be 25 lakh 74,000. 75,000 into 12.87. 965 250. This will be reduced. Okay. Anything else? Portfolio appreciation has happened. How much? 12 lakhs. Then dividend received 1 lakh. So that is also added. Anything else? Expenses are there. Yes, expenses rupees 1 lakh. Expenses 1 lakh. This will give you total net asset value. And this will be how much? 1608, 75,000 2574,000, 965250, 12 lakh plus 1 lakh minus 1 lakh will be netted off. So 16 crore 36 lakh 83,750. This will be divided by the outstanding number of units, which is 1 crore 25 lakh plus fresh subscription were 2 lakhs. So plus 2 lakhs less 75,000. So 1 crore 25 lakh plus 2 lakh minus 75,000, and outstanding units will be 1 crore 26 lakh 25,000. We will get a NAV per unit equal to, tell me, 12.965. Absolutely correct. Done, done, and done. I hope everybody is clear with this question. Done. Chalo. Done. So we are clear with the example. We are clear with the formulas. We are clear with the connected sum. People are asking for the break. I don't think so. So early you need a break. Others? You need a break so early? Starving, oh my god. No. First I will explain you a concept. Only then I will give you the break. I know you need a break, but first I will explain you a concept. Then I will give you a break. Okay? Yes? Chalo. So I'll start now. So next, before we move on to the new sum, I have a concept to discuss. Shall I start? Okay. So now, so far we have done a sum on open-ended mutual funds. Question number 1 based on open-ended. Question number 2 open-ended. Question number 3 was open-ended. What if a question is on closed-ended? Can that happen? Yes. Even though 90% funds today are open-ended, there are still 5 to 10% which are closed-ended, right? Right? Okay. So suppose if SK Mutual Funds comes up with a closed-ended fund, okay, and the SK Mutual Fund came, the NFO date was 1st of May to 10th of May. 1st of May to 10th of May. Yeah, NFO is like a IPO. NFO is IPO for mutual funds. What IPO, initial public offer, is for equity shares, is NFO for mutual funds. Absolutely, yes. So now pay attention. This is the date when SK Mutual Fund came up with a closed-ended fund. Obviously, the students who are attending the lecture also wanted to invest in this. But 1st to 10th May, will they be able to invest in this fund? The answer is no. These guys are even busier than the Prime Minister of the country at that point in time when the NFO was launched. right? Am I right? Yes. So there's no possibility that between 1st to 10th, these guys are going to invest. So the date has gone, but they wanted to invest. Now they got free. These people who wanted to invest got free on 15th of May. On 15th of May. And now they have, say, rupees 1 lakh with them, which they want to invest in SKM mutual fund, closed ended fund. Now what will they do? It's a closed ended fund. If it was open ended fund, they would have gone to SK fund house, told that, okay, take 1 lakh rupees, give me the units. But that is not possible now. In closed ended fund, you cannot go to the mutual fund house. So now what will we do? Can I say now we will purchase in the market? Now we'll have to purchase. There is a scope, but we'll have to go to the market to purchase it. Now what happens in the market is this. Pay attention. Okay. So they got free on 15th of May and they went to the stock market. They went to the stock market to purchase SK mutual fund. They saw that on the 15th of May, see, the NAV publication compliance remains as it is. So even if it is a closed-ended fund, SEBI tells every mutual fund has to publish the NAV as of closing day. So NAV published is rupees 15 per unit. 15 per unit. But when they went to purchase this in the stock market, the price in the stock market, the price in the market price in stock market is rupees 18 per unit. Tell me, is this possible? Is this possible? That NAV is 15, but the market price in stock market to purchase this SK mutual fund is 18. Is that possible? The answer is yes, because the price in stock market is based on demand and supply. Now, after 15th of May, all CA students have gone to purchase this. So the demand has increased and hence the price, even though NAV is 15. Are we understanding? This is possible only in a closed-ended fund market. Can I say this fund is selling in the market at premium? With your permission, can I say this fund is selling in the market at premium? Everybody, yes? At premium? Yes, everybody? Yes? Now, I know where your minds are running. I know where your minds are running. Sir, can there be a vice versa possibility? Obviously. Obviously, anything which goes up will come down, will again go up. So, there is a possibility that the NAV is 15. That the NAV is 15 per unit, but the market price in stock market is rupees 14 per unit. Very much a possibility. So in such situations, what will we say for this closed-ended fund? What will we say? It is at a discount. It is at a discount. It is trading at a discount. Here it is trading at a discount. Here it is trading at premium. Are we clear, everybody? Tell me, are we clear, everybody? Bolo bolo tell. Yes? Right? Perfect. Now if somebody tells me that I want to purchase the SK mutual fund, the purchase price will be dependent on the market price in stock market. Market price in stock market. Whether it may be at par also. I'm not saying this will always be the scenario. It may trade at par as well. It can be any scenario because it is based on demand and supply. Got it, everybody? Arey bolo tell. Hey, whatever. Yes? Yes? Okay. Now suppose, let's take an example from somebody here. So say Mr. Z is there. There is Mr. Z who has come to, who wants to purchase SK mutual fund. The NAV, Say he wants to purchase it on 1st of January. The NAV is, and this mutual fund is a closed-ended mutual fund, a closed-ended. The NAV is rupees 10 and the market price is rupees 15. Tell me what will be his purchase price. Suppose if he is planning to purchase 1000 units. What will be his purchase price? Tell me everybody. Tell me what will be his purchase price. 1000 units he has to purchase and it is a closed-ended fund. So can he purchase at NAV? Nah. So he'll have to purchase at 15. So can I say his purchase price will be 15,000 yaar everybody? Yes or no? His purchase price will be 1000 units at the rate rupees 15 per unit, 15,000. And on 10th of January, he thought of selling it. When he went to sell the 1000 units, he saw that the NAV in the market is 12 and the market price is rupees 14. Tell me what will be his selling price. Will he sell it NAV now? Now he will select, yes, the market price. So at what will be his sales? It will be rupees 14,000. 1000 units at the rate, again, market price, which is 14 per unit. So NAV, so market price can be more than NAV, can be less than NAV. It can be anything. Got it, everyone? But whatever it is, in a closed-ended fund, the purchase and sales will always be at, again, in a closed-ended fund, purchase and sales will be at market price on stock exchange. Hey, Samjhi Guru, can you explain about the purchase price of closed-ended fund? Yeah, closed-ended fund purchase price is the market price. Closed-ended fund sale price is the market price on stock market. What do I explain, Dina? Tell me. Are you clear, Dina? So in a closed-ended fund, purchase and sales will happen at market price on stock exchange. Full stop. And then if you want to check whether the the whole transaction is at a profit or a loss, that can also be done. So what is your sales value here? 14,000. That is your sales. What was your purchase? Can I say 15,000? So 15,000 was your purchase. Divide by. So selling price minus purchase divided by what was the base? Base is always the purchase price and that is 15,000. So 1,000 loss divided by 15,000. How much loss you are making? 1,000 divided by 15,000 into 100. You will be making a loss of 6.67%. Are we understanding, ladies and gentlemen? Yes or no? If yes, then let's start with a question. After that, I will give you a break. Don't worry. Let's start with a question. Question number 6. Question number 6 is now what we are going to start with this base. And then you can take your ample time to write the example and then the question. Question number 6, everybody, on your screen. Let's start. On your screen. Mr. Vivek purchased a 3-year closed end fund of Tata when the fund was launched at an opening offer price of 10 per unit. So what has Mr. V done? Always have the habit of writing a summary. So there is Mr. V. What is Mr. V doing? He is purchasing a closed-ended fund at offer at NFO, new fund offer, IPO of mutual funds at 10 per unit. So Mr. V purchase mutual fund at the rate rupees 10 per unit. Okay. Then. Since then the units got listed on stock exchange. After a year, the NAV of the fund was 12.5. However, the units of the fund were trading at a discount of 25%. Okay. See now what has happened. After NFO, the units got listed on the stock exchange. And NAV of the usual exchange again after a year, the NAV of the fund was 12.5. And however, the units were trading at a discount of 25%. So when he went to sell the mutual fund, what happened? When he went to sell the mutual fund, what happened? The NAV was 25. NAV was 12.5. But what was its price in the market? What was the price in the market? It was trading at a discount of 25%. Always remember, whenever they are saying that there is a discount of 25%, there is a premium of 10%, it is always, the base is always NAV. So the base is always NAV. So market price always calculated with respect to NAV, with respect to net asset value. So if net asset value is 25 and they are saying there is a discount of 25% at which it is trading, 12.5, and there is a discount of 25% at which it is trading, so minus 25% will give me the market price as 9.375. We'll give the market price at 9.375. Are we understanding, guys? So I will have to sell it in the market at, because it is a close-ended fund, this will be my selling price. Because it is a close-ended fund, but I purchased in NFO, this was my purchase price. And at the same time, they have said that during a year, a dividend of 5% was given. Hey, dividend is calculated on what? Dividend is calculated on what? You have cleared your intermediate, so you would know that dividend is always calculated on face value. Why so? Because SEBI said that, see, if dividend, we have heard so many times now, dividend, Wipro declares a dividend of rupees, Wipro declares a dividend of rupees of 200%. 500 rupees 500 rupees fund amount is there of Infosys. Wipro share is in the stock market, it is at 500 and they are saying 200% dividend, so 1000 rupees dividend. No, dividend is always on face value. So 10 rupees dividend, 200% means 20 rupees dividend. Why? Because SEBI says that every day the price of stock market of the shares changes every second. So now it is impossible to track and calculate dividend on that basis. So let's take a standardized figure. Standardized is face value. So dividend always calculated on face value. Why? For standardization. For standardization. So if rupees 10 is the dividend, 10 is the face value, dividend is 5% and that is rupees 0.5 per unit. Got it? Right? Okay. Now. They have asked us to calculate what? If Mr. Vivek sells the units in exchange, he would have earned any return at all or not? Oh. So let's see how much return Mr. Vivek has earned. How much return Mr. Vivek has earned? So we will say Mr. Vivek has sold it at, see, number of units are not given. So let's assume it to be 1. So Mr. Vivek has sold it at 9.375. Mr. Vivek has purchased it at Mr. Vivek has purchased it at 10. Plus, he has got some dividend. Hush, he has got some dividend. So dividend is also like an income. So sale is an income. Dividend 0.5 is an income. Purchased at 10. So what will be the return? So the return will be sale plus dividend less purchase cost. So what is the sale price? 9.375 plus 0.5 less 10 equal to and this is 0 minus loss. Oh my god, 0.125. Divide by, see, if it's a return, absolute terms is this, and if I want to calculate the percentage, this will always be divided by the purchase price. The base will always be purchase price, which is rupees 10. So this will be how much? This will work out to a loss of a negative return of 1.25%. Hey, samjhigudu. Copy gudu. Clear, everybody? Now you can have your dinner. Case? Samjhigudu. Clear, everybody is clear? So if I just have to write down a formula, that in case of a closed-ended fund, what will be the return percentage? If I have to write down, what will that be? Bolo bolo chal. The return percentage will be sale price plus dividend received less purchase price divide by purchase price. Pacha. Okay, Siddharth has a question. SD Siddharth. Sir, in closed end fund, will AMC release the dividend on sale in secondary market? Yes. Perfect, Mega Lakshmi B. Done. Sure. Now please copy this. Yes, divided by a purchase price. Now what you will do? Immediately write down the example. Solve question 6. Take a short test of the break and be right back. Okay.